Hello financial investors and welcome to the channel. In today's video we are going to be doing our stock market weekly recap for the 24th through the 28th of August 2020. We're going to go ahead and start off by taking a look at the previous week's changes between the 17th and 21st of August and do a little bit of a comparison to see where we are at now, how the market performed this past week, and then we're going to go ahead and jump into the four main indexes, taking a look at the entire S&P 500 as we have up now on the screen. We're going to go ahead and take a look at it for this past week, what stocks were strong, what stocks were weak, what sectors were strong or what sectors were weak. So it's been really interesting what stocks have actually been pushing this market higher the past week between the 17th and 21st. You saw Apple right here is up nearly 8.23%. You can see the FANG stocks are really pushing this market higher, whereas the rest of the market is kind of keeping pretty simmered down. You see financials kind of falling apart down here. So we are going to go ahead and take a look at what happened this past week and what could potentially happen in the future. There are a few earnings this week, which we'll cover up also in a little bit here, but it's not any big names that I am seeing. So let's go ahead and get into it. If you are brand new to my channel, have not yet subscribed, go down below, hit the red button to subscribe to the channel, then hit the bell to be notified every time we put out a new video, and then give this video a thumbs up, make that button blue, and let's go ahead and get into the video. So we're currently looking at the stock market changes between the 17th and the 21st of August. Pretty positive. I had a comment prior letting us know, well, they were asking or telling us that they expected the market to be green. And I was totally there with them. Market, I don't see any hiccups. We're going through such a blissful time right now in the market while the rest of the economy is kind of in shambles. So it's kind of crazy to look at that, but the big tech stocks that are kind of holding up 25% of the market, they're just such a dominant player here. Amazon, Microsoft, Google, Facebook, Nvidia, Netflix, they're all big portions of the S&P 500, the NASDAQ, and they are just pushing up these indexes week after week after week. So I don't see anything really having much resistance, especially with as much cash as they're in going into the market, and not a whole lot of other areas to really place it. I think CIT Bank lowered their rates to about 0.35%. I locked in a no penalty CD at 1.75% and another 1.5%. And then I think I had enough locked in at that point where I just kind of left the rest in a high yield savings account between Ally and CIT Bank. So there's not a lot of places to kind of keep your cash if you want to have it kept up with inflation. And Fed just announced, I didn't post it on my Facebook page, but they're going to go ahead and let inflation go out of control, and they're going to be focusing on job growth. They're going to go ahead and try and get jobs back kicking off here within the United States. So we'll see how that kind of plays out. I'll have to find that article and share it on my Facebook page, but if you guys have a really good read, if you guys would like to share anything down in the comment section below as far as what news that you have read this past week that you think is entertaining, if it's something that'll benefit the viewers, subscribers here, I will definitely approve it. So go ahead, don't be afraid to post any sort of links down there. I will approve them all as long as they're really beneficial. So that's kind of what went on this past week. You can see the market's S&P up 0.72, Dow Jones essentially flat because all it really has in it is Apple pushing it higher. The NASDAQ, of course, it has all the FANG stocks in there up 2.65%, and those small mid-cap companies got beat up down 1.61%. So jumping into what took place this past week, the S&P 500 was up 3.26%. That is amazing. Day after day after day after day, just continuous movement to the upside. I thought Tuesday, we were going to have, we went up so quickly on Monday, 1%. I thought Tuesday was going to be a bit of a cool off. You can see in the early morning of Tuesday, it was pretty simmery. We shot higher on Monday towards the end of the day. I'm not sure the reason for that, but after that Tuesday, I felt like we may have had a reason to kind of come down. We shot up pretty nicely. I believe we hit some all-time highs here on Monday, and we continue hitting all-time highs here throughout the week, actually closing at only 1 point below our record all-time high of 3,509 points. So we have closed here at 3,508 points and 1 cent. So just less than $1 away, or less than a point away from being at an all-time high. And stock futures are actually positive right now. So tomorrow, Monday, on the last day of August, we're going to hit another all-time high. The Dow Jones this past week, up 2.59%. So there's a lot of players besides Apple helping out the Dow Jones. So this one is up 2.59%, not quite as much as the S&P 500. And then we have the Nasdaq here. The Nasdaq actually reported, I believe, about a 3.3% increase to the upside. This is not showing the data here for the 5-day change, but when I did the calculation, I shared it over on my Facebook page and I shared it over on Instagram. It is about a 3.3% increase to the upside for the Nasdaq. So those FANG stocks are really pushing this market higher. Even those small mid-cap companies here, I believe on Thursday, the announcement of the jobs and what the new focus of the Fed is. So there was a bit of weakness here midday on Thursday on all the indexes. You can see the weakness there kind of drawing, and then what took place. I think that is where the Fed made the announcement that, we're going to go ahead and let inflation go wild. It can go as high as it needs to be in the short term, and we're going to go ahead and focus on jobs. And that's what kind of picked up the market here and brought it up to the upside. So here is the S&P 500. This is the entire S&P 500 for the 1 week performance. So that is why the markets were so green out there between the S&P 500, the Dow Jones, the Nasdaq, the Russell 2000. Look at that bright green out there. Look at Amazon, Facebook up nearly 10% this week. Google, Disney, Netflix, Comcast, Intel, Adobe, Microsoft, Nvidia, Netflix. It's just all positive up there. Even financials, the past week financials were beat. Last week, if you purchased any of like JP Morgan, Wells Fargo, Bank of America, Citibank, you were up at least 4% on all of those single stocks. And also we see credit services doing really well. They did pretty well last week, but looks like they have continued to do really well, with Visa up nearly 5.7%. We see MasterCard 8.61, PayPal. So just crazy growth. The areas that we do see weakness in, so kind of taking a look at this, we see some weakness in healthcare. So I wouldn't say that there's a transition of capital being moved from healthcare over to tech. I think that people have been and continue to pour money into tech. I kind of posted a meme over on my Facebook page earlier this week with just so many investors kind of just throwing cash. Everyone's out there trying to save capital, trying to save money, but Tesla and Apple are just continuing to rise, and a lot of investors are getting FOMO, the fear of missing out on Apple and Netflix, especially with them splitting on Monday. I'm going to go ahead and release this video as soon as I have it ready, but on Monday, Apple will be doing a split. I believe Apple was a 4-for-1. So I believe they're trading at, say, $500. Let's go ahead and take a look here. They're trading, okay, they're going to be opening up at $124.81. Says it right there. They're going to be opening at $124.81. Of course, right now in the pre-market hours or after hours, the market's already higher, so Apple may already be up till, say, 126, 128. Who knows where it's going to be landing at the rest of the day, at the end of the day. But I do see some weakness over in utilities, so maybe that was a bit of a safe play during the past few weeks. But investors are beginning to kind of say that maybe this market, maybe it's okay to have FOMO and buy into financials, tech, and other areas of the market. So let me know, what area of the market are you currently buying into? Are you focused on finding value, or are you going for that growth out there right now? I don't see any reason why you shouldn't be focused on some growth right now. I think it's really easy to make it in this environment. Just don't hold on to it too long. Have a price target in mind of where you feel comfortable buying at. Make sure that it's, of course, something that you want to hold for the long term, even if it does fall. So, for example, would you have any reason to sell Amazon if it fell back 10%? Probably not, because Amazon, while it may be really high priced, I believe Amazon, the company itself, has a long ways to go. Oil up 1.76 this week, kind of interesting there. The dollar, look at the dollar this past week, fell pretty hard. I believe it was at 93.50 starting this past week, so 93.28 is where it started. It now ended a whole dollar below. So here the dollar is continuing to be devalued here, going down, down, down. And silver and gold both positive this week, with silver up 2.77%. Gold right behind it at 1.31% to the upside. The bond market actually fell, I believe it was down 0.25% this week. So I posted 13 minutes ago that the bond market was actually down 0.54% this past week. So that is where the bonds kind of fell. You can see the downtrend here, just down, down, down. Oh, it says right there, down negative 0.64%. Is that NASDAQ? Okay, no, it didn't have it there. So the bond market there down 0.64% for the week. Now the 10-year, so even we saw the dollar devaluing. So the dollar devalues and the 10-year treasury note actually increases its yield just because that dollar goes down. The bonds also are going down, and we see the bond rate actually rise here to 0.73. The past week it was at 0.64. So that's a difference of 10. About 9%, actually. What? Maybe it was at 0.63. I thought it was at, and maybe I believe it was at 0.63. Let's go back really quick. Right here, we'll take a look at the 10-year bond rate, 0.64. So it was at 0.64, and it's now at 0.73. So it's up what? 6 points, and 3 is 9 points total. So up just 9 points, 0.09%. And then we have 30-year mortgage rates remaining at 3.14. There's no change at all to the 30-year, but there is a slight change to the 15-year. I don't recommend anybody getting a 15-year mortgage rate. It is just not worth it. You know, the difference there in the rate from a 0.261 to a 0.314. I just refinanced my own home to a 2.75%. I kept my rate, my long term. I had a 30-year fixed rate at 2.7, well, it was at 3.25 or 3.75. I just refinanced it down to 2.75. I'm actually considering keeping my 3-bedroom, 2-bath home, and it'll be my third rental while I buy another home for our family. So that's something I'm considering, and you know, in the future. And that is pretty much our weekly recap this past week. Again, we did have some earnings coming up this week, so if you guys are interested in some earnings, we do have Zoom after close on Monday. And I didn't know of a whole lot more really going on. We see some retail. We have Macy's and DocuSign could be pretty interesting there. But beyond that, I don't see a whole lot of special earnings going on this week. Let me know down in the comment section below. Are you looking forward to any earnings, or are all your companies that you're tracking release their earnings? So that is going to be it for today's video. If you guys have not yet subscribed, definitely go down below, hit the red button to subscribe to the channel, hit the bell to be notified every time we release a new video, and give this video a thumbs up. Hit the button, make it blue, and that is going to be it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.